Will the bank take ownership of my home? Can they ever force me to move out? Are reverse mortgages perfect? No. It is very important to know that Canadian and US reverse mortgages are fundamentally different. In many ways, a reverse mortgage is just like a regular mortgage. When you get a regular mortgage, the bank lends you money and registers a charge against the title of your house. In exchange, you have to make a monthly mortgage payment. Well, a reverse mortgage is exactly the same. The bank lends you money. They register a charge against the title. But there's one key difference. The monthly payments are optional. This means you can make payments to pay down the loan. And I often advise my clients to do this if they have the cash flow, because it stops the interest from compounding. You are free to start, stop, or pause these payments at any time you wish. But you are never required to make these payments. If you choose not to pay, the interest is simply added to the amount you borrowed. When you eventually sell the house, you pay back the loan plus the accrued interest. So, to answer the first burning question, will the bank take ownership of my home? The answer is no. You stay in control and you stay on title, just like you do with a regular mortgage. Now, let's look at the worst case scenarios. It is very important to know that Canadian and US reverse mortgages are fundamentally different. In Canada, we have a statutory protection called the No Negative Equity Guarantee. Here is exactly how it works with real numbers. Let's say the market crashes. You pass away and your home is sold for $500,000. But because of the accruing interest, the loan balance has grown to $600,000. In the US, your estate might be on the hook for that difference. In Canada, the bank writes off that $100,000 loss. You can actually beat the bank. I know, it sounds kind of crazy, but the lender is legally required to cover the difference. You or your heirs will never owe more than the fair market value of the home. The risk is 100% on the bank. Now, to answer the burning question from the beginning of the video, can they ever force me to move out? The answer is no. The bank cannot force you to sell, even if you owe more than the house is worth. And they cannot cancel the loan, provided you simply handle your standard homeowner responsibilities. Pay your property taxes and your condo fees if applicable, keep your home in good condition and your home insurance valid. As long as you do these things, you stay in your home for as long as you wish. So, why would a smart homeowner do this? Let's look at 3 real-world scenarios from my recent files to show you how versatile this tool actually is. First is Ali. Ali was facing some health challenges and the costs that come with them. He had accumulated some high-interest debt and had fallen behind on property taxes and home maintenance. He used a reverse mortgage as a strategic reset. He paid off the high-interest debt, updated the house, and he even bought a reliable vehicle to visit his grandkids. He didn't have to sell his home. He restructured his finances to stay in it comfortably. He traded stress for stability. Next, meet Sherry. She wants to downsize, but she knows the real estate market is soft right now. She refuses to sell her home for less than it's worth. Instead of selling low, she used a reverse mortgage to access cash flow now. She is using the funds to travel and enjoy her retirement today while holding the asset for another 3 to 5 years. She is effectively buying time, waiting for the market to rebound so she can sell at the top. This is her strategic plan. Finally, look at Maxim. Maxim is a snowbird who wanted to buy a vacation property down south. He didn't want the headache of qualifying for a foreign mortgage or liquidating his investment portfolio to pay cash. Instead, he unlocked the equity from his Canadian home to become a cash buyer. He bypassed the strict income qualifications entirely and used his Canadian asset to finance his international lifestyle. He plans to make the monthly payments on his reverse mortgage through the rental income he will make on his vacation property. Are reverse mortgages perfect? No. The interest rates are typically 2% higher than conventional 5-year fixed mortgages. This is because the lender is taking the long-term risk of not receiving payments for decades, while also providing you with a no negative equity guarantee. Ultimately, you are paying for cash flow freedom. You are paying for the ability to live in your home without a monthly bill. To learn more, head over to revmtg.ca. It's a great resource to estimate how much equity you can access, see up-to-date reverse mortgage rates from all the top lenders, and discover deep dive articles on how to use a reverse mortgage as a tool to your advantage. There's a lot of misinformation out there regarding reverse mortgages, and my goal is to provide the clarity Canadians deserve. If you found this breakdown helpful, please give it a thumbs up or share it with a friend who's weighing their options. It helps ensure more people get access to transparent information. I'm Alexander Gasenko, your trusted Canadian reverse mortgage broker. Until next time.